Start. Welcome to the course, and this course, Principles of Accounting 2, is a continuation of our previous accounting course. As you can see here that we will start from chapter number 10. I have already uploaded the course description, the syllabus. It is available on Blackboard. If it is not, let me know. This is the file which is available on Blackboard about course syllabus. Our grading scheme or assessment policy will be standard one. You'll have 2 quizzes, 14% assignments, 14%. This one will be from the textbook. Midterm examination theory, it will be on campus. Quizzes and assignments will be online. Final exam theory also 28%. It will be on campus. So basically, if you add all these marks, it will be 70 marks from your textbook material, and we'll have a practical midterm 12%, which will be based on SAP. It will be a practical midterm, and final exam practical will also be 18. So 30% will be conducted from SAP material. 70% of your assessment will be covered from your textbook. Textbook is same which we have used before in accounting 1. I'll just show you. This is the book we will be using. Any question about book, its availability, any issue? Yes, please. It is very important that you respond, right? All clear. Okay, Mansoor. So clear about textbook. Any question about assessment? If it is clear. SAP material I will provide you later on. Maybe next week we'll have an SAP username, password, as well as the material. So whatever is the relevant material. Yes, Faisal. Yes, Faisal, do you have a question? Yes, it is same of accounting 1-to-1, same system, yes. Now, just for my information, all of you have taken a course in accounting 1, and is it with me or other teacher, and have you used SAP before as well? Anyone who did not use SAP before, please write it down in the comment section so that I can get an idea about the class situation. Yes, please. Anyone in the class? I have 20 students, so I expect answers. Do you have and experience, or you have used SAP in Accounting 1 before? Okay, thank you for this. Anyone else who did not use SAP, which is okay. Just want to know. Anyone in the class who did not use SAP before? Mm-hmm. Abdulaziz Saud, you did not use before. Abdulaziz Majid, or you use? I don't know. I don't get it from the message. Okay, okay, thank you. Anyhow, it's not a big deal. It will be new one, so just like a new beginning, it will be okay. So you learn it. So just want to know. So what are the chapters we will be covering in this course? Already I mentioned it in a course description. Chapter number 10, 11, 12, 13, 14, 15, and 17. These are the chapters which we will cover in this course. Chapter 1, if you remember, 2, 3, 4, these are the chapters which you have already covered in Accounting 1. In Accounting 1, it was up to chapter number 9. Now we'll start from chapter number 10. This is what we'll start for Accounting 2. Chapter number 11, chapter number 12, chapter number 13, 14, 15, and 17. 16 will not be included. So these are the chapters which will be covered. Chapter 10, plant asset. Chapter 11 is about current liabilities. Chapter number 12 is partnership accounting. Chapter number 13 is capital stock transactions for a corporations. Continue with same thing with chapter 14. Chapter 15 is long-term liabilities, and 17 is cash flow statement. Again, it's important to have an access to your book, because the practice which you will get it will be available only in the book. Plant asset and natural resources and intangible assets. This is what we will be looking in this course. Yes, any question until now? Please feel free to ask questions. It's important that you should participate in the class, and asking question is very important. Now, if you look at in your screen, I'm just sharing with you the balance sheet and income statement of SABIC for year 2021. Do you know what is a balance sheet? Can someone tell me what is income statement and balance sheet? Any idea? This one, you can see here, this is statement of financial position, or we call it balance sheet. Right, this is just another name for a balance sheet. In balance sheet, what is included? You have assets, and one of the asset is property, plant, and equipment. This is the chapter which we will be looking right now. As you can see here, this is property, plant, and equipment for SABIC, it is, this is the number. Okay, similarly, there are other types of assets. This is what we are now going into detail. This you did not study in chapter number in accounting 1, which will see intangible asset, right? Now you'll see, remember, if you look at here, there are numbers. And how did these numbers appear here? It is because of accounting. So how do we get the number here is by making some journal entries in accounting about property, plant, and equipment. And it showed us this number, right? So can we calculate what is the total assets as a percentage, property, plant, and equipment as a percentage of total asset? What is the total asset? This one. Can someone give me this number? What is the percentage? Property, plant of equipment means this number divided by total asset. Yes, can you give me this number? What is? Yes, please. What is the, in terms of percentage, property, plant, and equipment for SABIC in terms of total asset? 131 million divided by 318 millions approximately in terms of percentage. I can raise the voice. Yeah, please let me know if you have any issue in the voice. Just a minute. I'll change my headphone. Yeah, please, if you have any issue with the voice quality, let me know, because I don't know the other side. So you know. Yes, how about now? Is it clear? Yes, is it clear now, the voice? Okay. Yes, Bassam Saad, are you there? Yes, Bassam, can you tell me what is the percentage of property, plant, equipment in terms of total assets for SABIC for year 2021? Can you calculate? Two numbers are given, 131 million divided by 318 million approximately, right? What will be the number? It is 0.411, yes, or approximately 41%. Thank you. Okay, so what is 41%? So property, plant, and equipment are 40. Yes, Faris. You raise a hand. You want to say something? Faris. Okay, okay, no problem. Yes, if you have any question, anything, you can type in any comment. So type in. So how did this number comes here? Remember, this is the point. Before I start, I just want to give you some introduction. So now what is this number? It is a combination of different accounts in property, plant and equipment. There are different types of accounts. If I want to see the detail, I can see number 7, detail, or note number 7, which provides me the more detail about these accounts, right? So what I will do now, I will look at this one, number 7. It is again just for your explanation. You don't have to memorize something from here. It is just an introduction to start our class, right? So all these numbers, they came from different accounts. What are those accounts? So if I go to the bottom and I can see number 7 to see what is the. See this one, number 7, property, plant. The number which you see above, there is a detail, right? Property, plant, and equipment. This is the detail. What is included in property? Land and buildings. Land owned by SABIC. Okay. Building, plant, like where they manufacture in Jubail for Hadith, for Safco, the different subsidiaries. There is a plant and equipment like machines, right? For certain things for manufacturing. These are all part of there is a value. Furniture, table, chairs, some fixtures. They have vehicles. These are all, we call them property, plant and equipment, or in accounting one we said it is like non-current asset or fixed asset. It's just a different name. And some asset under construction, and then the total value is this one here for all of them, right? Or at the end, these are, I'm not discussing the detail, but this is what we have. How these numbers are reported here, this is based on accounting. Remember, the number you see here is based on different accounting transactions. Now this is what we will learn in this chapter, that what is the accounting for property, plant and equipment. When you purchase land, what is the entry? When you sell the land, what is the entry? When you purchase building, okay. When you construct plant, for example, what are the entries? This is what we will be seeing. Okay, this is what we will look at it in this chapter. Any question? Yeah, so we'll continue with chapter number 10 if no question. Thank you, Abdulaziz. Yeah, please, very important to respond in the class. If I ask question, you should reply. Otherwise, if I pick a student and he does not reply, he will be considered as absent. Now, chapter number 10, plant asset, natural resources, and intangible asset. This is what we will be learning in this course, in this chapter. What is the accounting, right? For different types of expenditures. What are the accounting entries, treatment? This is what we will learn in this chapter. Then we will see what is different depreciation method for plant asset. Do you know what is depreciation? Anyone has an idea what is depreciation? Yes, what is depreciation? It is like an expense in the asset, okay. Okay, now in this picture, I'm showing you, right? There is a plant, right? You can see in this picture, this is a plant, right? By Sabic. How it was constructed? Will it continue forever? Understand first before we start. Let's say the cost. This is constructed in year 2022. Imagine this plant which you see in this picture. It is constructed this year, 2022, for 50 million reals. So now this cost, is it a cost for 2022? I need an answer, please, very important. Let's say the cost of this plant is 50 million, okay, and it is constructed in this year. So when you prepare your statement, this cost, is it for 2022? No, yes, because maybe this plant will be used for, let's say, 50 years. I'm just saying as an example, life of this plant is 50 years. So the cost should be divided, right? 50 million divided by 50 years. Is it correct? Okay. Now, yes, this is what we have. This is, you have to, in other words, you have to depreciate it every year. The cost of 50 million will not be included in every year. Every year it is calculated as the depreciation expense, which will be included as an expense, because this plant will be used for next 50 years. Okay, so that's why we have a concept of depreciation. We'll see it in the detail later on, but you should have this understanding before we continue. Okay. Now, once you have a plant asset depreciation, what about its disposition? For example, after 50 years, what will happen to this plant asset? Disposal. What is the accounting treatment? Remember, after its useful life, what will happen? Can you sell it for some price, or you have to spend even cost to remove it? So what is the accounting entries? This is what we will also do it here. Also, in companies, you have natural resources. Like in case of Aramco, they have oil reserves, oil wells. In terms of Ma'adin, they have mineral reserves. Those are natural resources. What is the accounting treatment for them? Okay. Also, you have intangible assets like copyright, patents. We'll see it later on. What is the accounting treatment? This is what you will learn. Then, how these things should be reported in the balance sheet. I have shown you one for SABIC, that how at the end it will be reported, which statement it will appear, and how we make the analysis. This is what we will have in this chapter, chapter number 10. So starting this chapter, plant assets, as we say that these are the resources that have a physical substance, right? I've shown you the example of a SABIC plant which has a physical substance, means it has a size, shape, it is used in operations of a business, right? And this one is not to sell to customer, it is to be used in production. These are the basic definition to consider something as a plant asset, and also expected to use this asset for number of years, next 10 years, 20 years, 50 years, whatever it is. Sometimes we call plant asset as property, plant and equipment. It's a one account. You may call it like this one, or plant and equipment, or you may call them the fixed assets, whatever name you could use. It can be fixed asset, it can be non-current asset, property, plant and equipment, we call them PPE. You'll see it in many books, they use this word, property, plant and equipment. It is same thing. Or sometimes you see the word non-current asset, fixed assets, it is same thing. Plant assets, they are very important for a success of a company. Here are some examples. You can see that for an airline, they need to have, large amount of property, plant, and equipment as a total asset. Just like SABIC, we have just seen it was 41%. In case of SABIC, it was 41%. This is the example in the US market. In terms of Microsoft, 3%. Can you tell me why there is very low percentage in Microsoft? Can someone tell me why there are very less plant assets in Microsoft? Yes, any idea? Or why there is a high amount of investment in property, plant, and equipment of the airline, Southwest Airline or Saudi Airline, for example, because they need, airplane, they need equipment which are costly. But in terms of Microsoft, which is a software house, right? They don't make an investment on those big equipment. Maybe they may have high investment in research and development costs for software. Okay, so plant assets are important as a percentage of total assets, but it also depends on the nature of the business. Okay, so that's how you see in SABIC it was 40%. If you look at Saudi Airlines, you may find out property, plant assets are large number because of the nature of the business. Is it clear, this slide? Any question? Okay. Next one. Now, what is the cost of the plant asset? How you record the cost? Right. Just now I've shown you a picture of SABIC plant. What was the cost? It says in accounting you have to record it at historical cost principle, which says this is the rule in accounting that you should record the plant asset at whatever cost you spend, the amount of money you spend on the construction of a plant you should record. What are the costs? It is all expenditures which are necessary to acquire the asset and make it ready for its intended use. When you construct a plant, all costs, construction of plant asset, testing, right, installation of some equipment, whatever cost was there, you have to record it and then you make an entry. Okay, so that's how you record the cost. Continuing on the next slide, land. If you purchase a land, then what are the costs? All cost which is necessary, which is incurred in making the land ready for its intended use. So you debit the land account and credit whatever it is. If you pay cash, you say debit land, credit cash. When you pay cash, what are the costs to be included? The purchase price you paid, closing cost means for transferring the title fees, attorney fees like lawyers fees, broker commission, agent, some property taxes paid to the government, right? So whatever is the cost you must include, and that is one it should be included. I'll explain with one example. If you see here on this one, what is the cost? His company acquires a real estate like a property, at a cash price of 100,000. Now this is the price you paid. Imagine you purchased a property, real estate, a property, right? And on that property there was an old warehouse as well. So what you did is you remove the warehouse at 7,500 and whatever material was recovered from there, you sold them 1,500 to Haraj, the material, which we call it salvage material. So basically 7,500 minus 1,500 is the net proceeds, right, or the net cost of removing a warehouse from the property you purchase. Additional expenditures are attorney fee of 1,000 and real estate brokerage of 8,000. The question says, what determine the amount to be reported as the cost? Can you tell me what is the cost, or what will be the cost for this property? What will be the cost of this property? 115,000. Yes, thank you. So it is 100,000 plus 6,000 plus 1,000 plus 8,000. So it will be 115,000. This is the cost of land. Is it clear? Thank you. Badr al-Hamari. Sorry, Badr al-Ahmari. Sorry. Badr, are you there? Badr al-Ahmari.
Yes, Doctor.
Yes, thank you. Badr, what is the entry? What is the journal entry to record the cost of this land? What will be debit? What will be credit? If you have to make an entry. Let's say we pay a cash price of this one. So what is the entry? Journal entry in accounting.
100,000 it's assets.
No. Journal entry. You know what is a journal entry?
No.
Do you want to go back to accounting 1 to study journal entry? Journal entry means what will be debit, what will be credit.
It will be credits.
What will be, let's say for this one, all this one, the number here, you pay cash. Falus,
Yeah.
you pay 115,000, the cash transaction. So what is the entry? Imagine you purchase this land and these are all costs, right? You remove the warehouse, you pay the fees to lawyer, you pay the commission, cash, so you pay total cost is 115,000. Now you calculated the cost, now you want to make an entry. You are an accountant of this company. So what will be the entry? What will be debit? What will be credit? Anyone else? Any other student? Rakan al-Ghathani. Rakan, are you there? Rakan. Yes, Rakan. What will be the entry? What will be debit? What will be credit? When you purchase a land, accounting 1, what should be the entry? Yes, Rakan. You can type in you know or you don't know. Yes or no, whatever is the answer. Land is credit and cash is debit. Okay, no problem. Anyone else other than Faris? Any other? What is the entry? Land credit and cash debit. Cash is credit and property is debit. Heather, yes. Faris, is it clear? When you pay cash, cash decrease, and decrease in cash is not debit, it is credit, first of all. And Haza, your answer is correct, but remember, not only, okay, any other students, whenever you are asked to provide an entry, always you give first what is debit, then what is credit, right? So you'll say property is debit, cash is credit. Again, this is basic, so you need to have this understanding. For example, I can say property or land, whatever you call it, right? Your account, this is the name of your account, which is increasing when you purchase property. So you'll say 115,000. That's how you write this. You should know how to make an entries. And since we are paying cash, so you'll say cash credit. This is how you write. This is the entry. First debit, then credit. This is the journal entry. Land or property, whatever you call it. Is it clear? Or you can call it, if I ask someone a question, what is an entry? You may say land to cash. These are just standard terminologies, the language of accounting. If I say land to cash, understand, this is the same thing. You are telling someone that land is debit and cash is credit. This is what you call it, land to cash. Just accounting terminology. You may say land or property to cash. Is it clear now, Haza? Okay, thank you. So this is basic. If you are still weak on this one, you need to practice. It is very important. You should know how to do it. If you don't know debit and credits, how it works, then this course would be very difficult. Property belongs to what? It is an asset and it belongs to the owners. You may write land or property, it's the same thing. Normally in accounting we write land, we don't write property. So it should, because we purchase a land here in this case, right? So you'll say land to cash. And this is the writing. I hope you know how to write debit and credits, right? This is on first on the left side, and on the right side you put credit entries. That's how we make an entries. This is very basic accounting one. Is it clear? Okay. Now, continuing with land, we sometimes you have land improvements. For example, you purchase a land and you constructed parking lot there. Okay. So you make some additions to parking lot, or you constructed a wall alongside a property. Okay, right? So you may have fence, landscaping, or you put some sprinkles, anything you put, right? So on land, if you do something like this one, so basically what will happen? Driveways, parking lots, they have a life, remember. But land has no limited life. Land will stay there for next 100 years or 1,000 years. But for parking lot or a construction on land, it has a life, limited life. Could be 5 year, 10 year, 20 year, whatever it is. So you have limited useful life. Understand this one for your theory. For land improvements, it will have limited life. This is very important. For limited life, you have to calculate a depreciation, right? We'll see, right, over its useful life, how to calculate a depreciation. But for land, we don't calculate depreciation. It's very important. So I will write it down here so that you can remember. No depreciation for land. Okay, there is a depreciation for building, there is a depreciation for land improvement, but there is no depreciation for land because land stays there. A building on land will depreciate. Anything you construct on building, it will depreciate. Okay, so be careful in the questions. Building, all costs which are necessary to purchase is, the building, for example, you may either purchase a building or you construct a building. If you purchase a building, so you have to put all the costs. What are the costs? Fees for attorney, like lawyers, transferring of title, transferring of malkiya, right, ownership, insurance, anything, real estate, broker's commission, agent commission. If anything you have done a repairing to that building which you just purchased, anything extra you have done on that building, it is all cost. Okay, should be included. If you are constructing a building, then it is a contract price. You gave a contract to someone. Okay, also there is a cost. Anything else for architect, for ruksa from government or some other expenses, excavation, any cost should be included in the construction cost. Same thing is for equipment. Remember, you are looking at property, plant, and equipment. Equipment are machines, right? And all the costs which are necessary to acquire the equipment should be included. It should be cash purchase price. If there is any sales tax or the riba, freight charges, transportation charges. Freight means transportation. Okay. Insurance during transit. Remember this one. Insurance during. What is the insurance during transit means? You purchase an equipment, let's say from Jeddah, and now you are bringing that equipment to the Dammam or Jubail. So during transit means during transportation, you have to make sure that it does not damage. So you make some insurance for transportation. Okay. If you pay it by yourself, you have to put it in the cost, right? And also, if there is any cost for assembling, installing that equipment, and testing the equipment before you start running it, these all costs should be included in the cost of equipment. Look at this example here very quickly. Leonard Company purchases a delivery truck at a cash price of 22,000. Related expenditures are sales tax, printing and lettering, motor vehicle license, and a 3-year insurance policy. Calculate the cost of the delivery truck. What is the cost of the delivery truck? It is a cash price of 22,000 plus sales tax or the riba 1,320 plus 500 for doing some painting on that truck, some changes. But license cost, remember, license cost is not part of acquiring cost. It cannot be depreciated. So this one is, maybe you can call it a normal expense, put it somewhere else, but not here, not in the cost. And also this insurance policy will also not be included. This one will not be included here. It will be included as your monthly expense or annual expense, whatever it is. But the cost of the truck, in order to depreciate, these are the costs which you include. Is it clear how this 23,820 is calculated and why 80 and 1600 are not included. Is it clear? Yes, please. Any question? Okay, now also in the book, I'm just sharing. Can you solve this part 1? What is the answer for part 1? This is in your book, one question, a practical practice multiple choice question. What will be the answer? Can someone tell me what will be the answer? Very quickly. Question number 1. Part A, B, C, D. You have these are the answers. What should be the cost of the equipment? Part D. Okay. Why part D? Because all these costs should be included, right? Installation and testing, insurance during transit. Remember, this insurance is not fire insurance or something else. This tameen is during transportation, so it should be included. Sales tax and cash price. So answer is D, and answers are already given. These are some of the questions in your exercise in your chapter. You need to practice them. Your exams also will come like these questions. So practice these questions. Very important. Is it clear? Okay, so now I will take a break for 10 minutes, and after 10 minutes we will continue in period 5. Okay, so take a break. Thank you. Yes, student, please welcome back. I hope you can hear me clearly. So this is where we stopped. And this is what we have calculated the cost of truck. And now we will make a journal entry for this one. Now, what will be the journal entry? That's what we are saying on the next one. Okay, that you have to first you have to calculate it cost. Now you have to make a journal entry. Now, what is the journal entry to record these costs? There is cost of a truck, which we already calculated, which will be debit. So equipment will be debit. Is it clear? Any question? Yes, please. I hope you can hear me clearly. Yes, what will be the other transactions, right? First of all, this is the cost of equipment, which we already calculated. Then we have other costs as well, right? Cost of license, which is expense. Expense is debit. Then you have insurance. Prepaid insurance is debit. And credit will be the total cash which we paid. This is the entry to record the equipment as well as other costs. Any question on this transaction? Okay, so no question. We'll move to next slide. Now, sometimes you have expenditures during the useful life, right? You may have ordinary repairs or you may have addition and improvements. What do we mean by ordinary repairs? Just like your car, for example, when you change an oil, right? Or when you change oil filter, right? This is just to augment, these expenditures, which are normal repairs, right? We call them ordinary repairs. These are expenditures to maintain the operating efficiency of the equipment or machine or plant, whatever it is. In that case, you debit maintenance and repair expense, credit if it is cash, like this one, and we call them a revenue expenditure. But sometimes you have addition and improvements, and the purpose of this one, understand, see what is highlighted, is to increase the efficiency, productive capacity, or useful life of the asset. Then let's say you replace the engine of your car, for example. Now that one will be, the purpose of that one is to increase the productive capacity or life of the asset. But ordinary repairs, which is to maintain, see this is highlighted, maintain is highlighted, and increase in both type of categories. Understand the transactions to record entries. When repair is done to maintain the operating efficiency, debit will be maintenance expense, maintenance and repair expense. If it is to increase, see the in the bottom here, in addition and improvements, if it is to increase, then debit will be the plant asset affected, whatever it is. If it is equipment, equipment will be debit. We call them capital expenditures. So understand the difference between revenue expenditure and capital expenditures. Capital expenditure is to increase the operating efficiency. Example could be when you install a new engine in your car, as an example. In that case, you have to increase the value of that asset by a debit entry. But if it is a normal repair, in order to maintain the efficiency or operating condition of the car or of the machine, then you will debit maintenance and repair expense. So this is an important classification which you have to understand. This is just a one example. You can read it. I will not discuss this one. Next one, another example. Try to solve this example by yourself, right? How these costs will be accounted for. These first payments are for cost of trucks and other payments are insurance and license. This is same like the question which we solved today. Now next one is, the topic is depreciation. What is depreciation? Any idea about depreciation? It is process of allocating to expense the cost of plant asset over its useful life in a rational and systematic manner. So process of cost allocation, it is not an asset valuation. It applies to land improvement, building and equipment and not land. That's what I discussed earlier. Why we do the depreciation? Because the revenue producing ability of an asset will decline over its useful life. Equipment has a useful life, and if you keep on using, its efficiency will decrease with the passage of time. So that's why you have to record a depreciation. Now depreciation are always applied to plant expense, plant assets. Okay. So depreciation is process of allocating to expense. Is it clear? Let's say, I'll explain again with some example as well. This is just to see what are the factors which we must consider in calculating depreciation. A cost, which is already discussed, all expenditures necessary to acquire the assets and make it ready for its intended use. If you look at this example in this picture, the truck, when you purchase a truck, how to make it available or make it ready for its intended use, whatever costs or incur, this is what you have to use. We call them depreciable costs. Then you have useful life, which is, remember, an estimate. It is very important for your theory questions. These useful life or a depreciation is an estimate. Remember, it is just an estimated life. Okay, estimated life of an asset. It is based on its need for repair or service life and obsolescence. So whatever is life, and then after the useful life, what we will do with that truck or with that equipment. Salvage value. Estimated, again, it is also an estimate, right? At the end of its useful life, what will happen? Another terminology for salvage life, if you look in the bottom here, alternative terminology, another name. In some questions, you may see the word salvage value. Some questions, you may see residual value or remaining value or leftover values. Residual, DUAL. So you have to read it, residual value. Now, depreciation expense is reported in the income statement and accumulated depreciation is reported in the balance sheet as a deduction from the plant assets. Now, we have different methods to calculate a depreciation. They are straight line method, is one. You have unit of activity method, and we have declining balance method. We look at them one by one, easy. So management decides, right, what is the best method to use for uh, calculating a depreciation expense. Okay, so which method to be used? Yes, please. Any question? Someone want to say something? So we have three methods of depreciation, and we look at them one by one with this example. Let's look at this example, and we'll explain the concept of depreciation. Bob's Florist purchased a small delivery truck on January 1, 2017. So in the beginning of January 1, 2017, this is the cost, 13,000. Now what is this cost, 13,000? It includes all the cost for painting, whatever the cost it was there. So imagine this cost is given. In real life, you as an accountant, you have to calculate this cost based on the price you paid to from where you purchase, based on any other cost, just like in previous questions we have seen. So this cost you have to calculate. So what is the useful life of this truck is 5 years. After 5 years, you can sell this truck for $1,000 in haraj, for example. Okay. So this is salvage value, or residual value is $1,000. Estimated useful life, not in terms of time, but if it in terms of miles. So the mile, it is 100,000 miles. So the life of the truck is in terms of miles is 100,000. Question says here, calculate the depreciation using the following method. First one is straight line method. Under straight line method, I will show you how do we calculate cost. So it is, you can calculate a cost minus salvage value divided by the useful life. So 13 minus 1, because 1 you will get it after 5 years, right? Salvage value. So how much you will depreciate? 13 minus 1, which is depreciable cost. So what is the depreciation expense for 1 year? Can someone give me the depreciation expense for 1 year? Muhammad Al-Ghamdi. Muhammad Al-Ghamdi, are you there?
Yes, doctor.
Yes, Muhammad. What is the annual depreciation for 1 year? Sanavi. How do we calculate? It is cost minus salvage value, 13 minus 1, 12,000 divided by 5. So what will be the depreciation expense for 1 year? Do you have the calculator?
Actually, I don't have the calculator now.
Mm-hmm.
But
Yes, but you can calculate. Yes, Rakan Al-Ghahtani. What is annual depreciation? Rakan. Rakan Raid Al-Ghahtani. Are you there? Yes, what is annual depreciation for 1 year? Come on, it is not difficult. 13 minus 12, 12,000 divided by 5. So, yes, Saud, 2,400. Yes, thank you, Mansoor. Yes, Saud. Saud Hantum. What is annual depreciation? This is how you calculate. On the next slide, you can see. In straight line method, our depreciation expense is same for each year, and depreciable cost is cost minus salvage value. Cost is given, salvage value is given, depreciable cost you can calculate, divide by 5, you get annual depreciation expense. Let's say for 2017 and January 1 we purchase, so we will calculate our depreciation based on rate. What do we mean by rate? It is same thing. 1 hour 5. 5 is the useful life. It's the same thing. Depreciable cost is 13 minus 1. So it is same. If you go see from the slide here, cost minus salvage value, 13 minus 1, which is 12,000. That's how we calculate 12,000 here. Multiply by the rate, which is 1 hour 5. Annual depreciation expense is 2,400. When do we record a depreciation? At the end of a year. Remember in chapter number 3 in accounting 1, when you have to make an adjusting entry for depreciation, right? You record what is the total depreciation for this asset. Accumulated depreciation, since it's a 1 year, it is same amount. What is the book value? Which is cost minus accumulated depreciation. This is the book value. What is the book value? Can you calculate? What is the book value of this asset? Abdullah Sami Al-Aqil. Abdullah Sami Al-Aqil. What is the book value for year 2017? Abdullah, are you there? Abdullah Sami. Yes, Abdullah.
Hello?
Yes, yes.
Yes.
What is
What's
the book
your
value?
question?
My question is, what is the book
Book
value for year
book
2017?
value.
How do we calculate a book value? It is cost
Minus.
minus accumulated depreciation. Cost in this question is 13,000. For this truck, the cost is 13,000. Accumulated
9,000.
depreciation is
9,600.
yes, thank you. It's not 9,000, it's 10,600. How we, okay, so you can see the answer on the slide.
Okay.
In the bottom it says book value is cost minus accumulated depreciation. Cost is 13,000. Not depreciable cost. Please, all other students, pay attention. It is cost, or the original cost, minus accumulated depreciation. Is it clear? Now, what will be the entry, journal entry for 2017? Remember, let's say today is December 31, end of a year. How are we going to record the entry for 2017? How we get the original? What do you mean the original? It is given in the question. I'm just going back here. You can see the cost, 13,000 in this slide. Is it clear now? Okay, now next, what is the journal entry? What will be debit? What will be credit? Journal entry to record depreciation. Chapter number 3, accounting 1. Abdul Aziz Al Khaldi. Abdul Aziz Al Khaldi, are you there? Yes, Abdul Aziz, thank you. What is the journal entry? What will be debit? What will be credit? To record a depreciation. Whenever we have a depreciation, you have to record. Something is debit, something is credit. What will be debit? For depreciation expense, whenever you have a depreciation, yes, please. Anyone? What will be the journal entry on December 31? What is the entry? Okay, no problem. Anyone else? Any other who knows how to record a depreciation expense? 2017, what will be entry? What will be debit? What will be credit? Debit is depreciation expense and credit is accumulated depreciation. Yes, thank you very much. In the bottom, yes, it is. Is it clear? Yes. Next one, Abdul Aziz Majid. What will be the depreciation expense for 2018? What will be the entry for 2018? On next year, what will be entry? What will be my depreciation expense is this one. What will be total depreciation? This is what we'll have, right? So now what will be the entry for 2018? What will be debit? What will be credit? Abdulaziz Majid. The same in the last year, yes. Yes, correct. Thank you. Is there anyone else? Mansoor, Muhammad. Yes. What will be debit? What will be credit? For 2018. Depreciation expense. Can you write down the entry? What will be debit? What will be credit? Or I'll share a screen with you. See, on 2017, we made this entry, right? So now what will be the entry for 2018, next year? You can see here, right? This is the entry, you already made it. On 2018, what will be debit? The amount. Yes, please, it's important. Abdullah Hussain. Abdullah Hussain Gahtani. Can you tell me what will be the amount? Yes, what will be the amount here? Depreciation expense for 2018. What should I write here as a debit? Yes, anyone else? Depreciation expense. What should be the amount here for 2018? Okay, let's say 2,400. What will be here? And credit, what should be credit? Yes, Muhammad Bakri. What should be here? Jabir, it should be 4,800, let's say. Is it correct? Should be 4,800 or 2,400? What should be here? Jabir Muhammad. Yes, so what should be the number here?
No, I'm wrong. Sorry, it's 2,400 because the debit must be with the credit. I'm sorry, I'm confused a little bit.
Yes, it should be. Why this? No, it is important for your understanding. Understand, depreciation expense is same every year. Now let me share with you my T account. Understand? Let's say I'll just hide it, this one. See, this is what I have. My equipment. See, whenever you have, understand, I'm just showing you. Let's say this is the entry for 2017 when you post. Remember, this is very basic accounting. 2,400. Okay, this is my equipment. Let's say equipment. What was the cost of equipment, if you remember? If I post it, remember, you purchase the equipment. It is the T account. The balance of equipment is, let me delete it. I'll just put it here. T account for equipment. Now please pay attention, it is now accounting. And if I post it, you should know what is posting. Make it a T account. This is what we have. Our equipment was 13,000. Okay, this is the entry. Remember, this is what we have done in 2017. Then you post it to your T account. Depreciation expense 2,400, accumulated depreciation. This is for 2017. Okay, is it clear? Is it clear what I'm doing? Yes, please. Understand, it's very important. You make an entry, then we post it to the T accounts or to the ledger accounts. Equipment is a balance sheet account. Accumulated depreciation is also a balance sheet account. Depreciation expense is an income statement for 2017. So if I prepare my balance sheet in 2017, this is my balance sheet for 2017. Let me show you my balance sheet. See, this Just don't consider this entry now. Now this is my balance sheet for 2017 where you put different assets. I'm not putting, we don't have information. One of the asset is equipment. This is how you put it. Equipment is 13,000 at a cost. Always stays same. Remember, in accounting, original cost stays same, whether it is, because we'll see 13,000 is the cost minus depreciation, total depreciation, since it's a first year, 2017, 2,400. So the value of our asset, 13,000 minus this one, this is 10,600 is the book value from that schedule. But this is in terms of presentation on a balance sheet, it is this one. Then you prepare your income statement for same year, for 2017, and you put revenues, whatever it is, we don't have expenses. One of the expense is depreciation expense. You put it here. So depreciation expense every year will be 2,400 because it's a straight line depreciation. Depreciation is same for 2017. Is it clear? 2017? Any question? Now let's move to next year. Remember, in 2017 you close depreciation expense and you prepare same thing for 2018. Let's say for 2018 my depreciation expense is 2,400 again from here. Accumulated depreciation, you have another entry, you put it here, 2,400. So my total accumulated depreciation will become 4,800. So when I prepare my balance sheet for 2018, you can see here on the right side, equipment cost is same 13,000 minus accumulated depreciation 4,800. Now this is the value of my asset. 13,000 minus 4,800, it is 8,200. This will be shown in the balance sheet. So accumulated depreciation, this is the reason we call accumulated depreciation a contra asset account. Accumulated depreciation because it reduces the value of equipment. So anyone, any user can see that this equipment was purchased for 13,000, but total depreciation for past 2 years, because this is accumulated, okay, for past 2 years this one, now the value of asset is this one. Similarly you continue for 2019, 18, 21, but depreciation expense you can see here it is same every year. In income statement it stays same 2,400 because straight line depreciation, we are saying depreciation is same. Okay, is it clear? Any question on this slide or this Excel sheet? Okay, then we'll move to what we were doing. So this is what we had basically. You just try to understand the reasons. So 2018 is done. Same thing for 2019. We can have our depreciation. So entry will be, this is how you calculate. This is the calculation. This is not accounting entries, right? Accounting entries are, you have to make it separately. This is your calculation. How much is annual depreciation? How much is accumulated depreciation? Okay. Is it clear now? What will be the journal entry, which is important? So at the end, when the life of asset finish in 2021, what should be the book value? It should be same as salvage. That's how we done. So now everything is completed and you will sell it in Haraj, for example. Is it clear? Any question? Yes, thank you. Now, Abdul Aziz Majid, my question to you. In 2021, the book value is how much? Abdulaziz Majid. You can type in your answer. 1,000. Yes, thank you. Now let's say you go. This was your expected value that you would sell it. Now let's say today is 2021. You go to Haraj and you sell this truck for 1,500. Remember, this was your estimate, right? So now you go to Haraj and you sell it. If you sell it for 1,500, is it a good deal? Abdulaziz Majid. If we sell this truck at the end of 2021, instead of 1,000, this is what we believe, that the value will be 1,000. But when you go to Haraj, you sell it for 1,500. Is it good or not good? Yes, it is good. Yes, thank you. Yes, so it is. You can call it, because we'll be looking at it, we call it gain. Remember, this is gain, faida, or this one, gain on disposal, right? Or you may have a loss, right? Instead of selling at 1,000, if you sell the same truck for $200 in Haraj, then you have gain or you may have a loss. Everything is possible. Is it clear? Now we'll see it later on. We have to make certain entries, right? But we have to understand the accounting treatment. So we have to make an entries later on, not now. But remember this concept of gain or loss. Always you compare with the book value. If you sell something more than the book value, you have gain. If it is less than the book value, you will have loss. Clear? Now, next slide. Imagine instead of purchasing on January 1, we purchased in the year 2017 in month of April. So basically, in month of April, so it means the depreciation is for 9 months for year 2017. Remember, in 2017, before we said we purchase on January 1, so we have a full year depreciation. What if your depreciation is for 9 months? Because at the end of 2017, which is December, when you make an entry, only 9 months have passed. So you have to record a depreciation for 9 months. So that's how you multiply. Every calculation is same. So multiply by 9 over 12. You get your depreciation for 2017, 1,800. Is it clear? 1,800 to everyone how it is calculated? Yes, please, everyone. Is it clear or not clear? Okay. Similarly, in last year 2022, because we will not wait until end, the life of the asset will finish on end of March in 2022. Only 3 months depreciation you should record for last year. So that's why it is 2,400 multiplied by 3 over 12, and your depreciation for last year is 600, not 2,400. Is it clear? 600, the calculation of 600. Okay, thank you. So then you can make a journal entry for 2017. Amount is same concept, 1,800, right? And you make a depreciation expense to accumulated depreciation. Okay. So what will be the journal entry for 2022? It will be depreciation expense debit for 600. Remember, it's important. Accumulated depreciation will be 600 for 2022 when you make an entry for 2022. Is it clear? If the question says make an entry for 2022 from this schedule, you should be able to make an entry. Is it clear? Now next one is this example. You can calculate it yourself. Very simple, same concept. What is the entry? Like from there. This is how the question will be there. I'm stopping here at this slide of unit of activity method because time is up. So next class, we will continue from this slide. Is it clear? Any question? Okay, so if no question, then it is end of our class.